Okay, good morning, investors. Right, so I'd like to just share with you a very simplistic way of analyzing charts. So I've created this really badly drawn little uh, bunch of lines here, and what are these are supposed to represent are moving averages. Okay, so if you know nothing about chart analysis and you know nothing about assessing how high a price is, whether a price is high or low, or where's the best time to sort of buy, and you're just buying, or you don't even know where to start buying, this is a very, very simple way to analyze whether a price is a good price to buy or whether it is not. So, this is now, like I say, just a really poorly drawn little graph here with three different lines. One of them is a yellow line, the other one is white, and the other one's red. Now the yellow line is a faster moving average line. Okay. Now there are no chart candles on here or anything, because I just want to explain the basics of this, and then we'll go take a look at a chart or two. So the yellow line is the faster moving average. Typically you would have it as maybe a 9-period moving average or something like that. Then the white one is a little bit slower, so it will take more periods. Usually you would use something like a 21 period moving average. And then you have this really slow red one over here, which is typically a 200 period moving average. Now, what we should be looking for here is where price is below this 200 period line. In other words, the slowest moving average. So currently here, you would find that price is moving below this. So what is an average? An average, by the way, is the average price of a price of a chart or so on, which basically says, without thinking too much, that at some points the price is below the average and some points the price is above the average. So that kind of gives a person a bit of confidence in to say that if price happens to be below this line, at some point it is going to be above the line, because that is the average. All right, it is the middle, so it has to go above it at some stage. So typically you could actually say that this would be maybe termed a buy line. So anything below this, if you buy, at some point it's going to move above it. So and there you would now obviously appreciate your investment. Now just to go into a bit more detail, what's handy about these two lines here, you can see that this one moves in a gentler slope than this one, which is now the faster moving one. Now typically where price or this average converges with this line, that is where you should be interested, because that tells you that price is about to cross over and move above this average. Now obviously where price starts to converge back in a bearish manner to here, that is typically a indication that price might move below this average. All right, so in other words, go a bit cheaper. Now obviously this has to be taken into account with this one over here. So all of this price action here is actually below average, which means it has to at some stage move above that. Here we go again. You see price is going to be moving towards here. It's converging. We can call this a bullish conversion. And this is typically where you would say, okay, this is a good place to perhaps buy this stock. All right, because it is at some stage going to move above the average. All right, it's moving towards the average. This is not to say it will. It might go back and turn around, but this is the chance you take. This is just, however, a stronger indication than if over here. All right, you wouldn't typically be very confident with buying if you see this line is sort of traveling along with this. However, where you see it's starting to move up, that means price is generally moving up. And where it crosses over, this whole area over here is all buy zone. you're welcome to buy here because it is diverging away. That means price is actually moving aggressively up beyond this average. Right, and here you can see price is converging back towards this one here, but it is still below this slow moving average. All right, so you would typically take a look over here again, where price diverges away in a bullish trend away from this average and up and above this one. So you could be quite confident in buying over here. Now, watching over here, you see it is starting to converge back towards these averages, which tells you price is starting to tend to the lower side, and you might be wanting to take profit over here had you bought over here. You don't have to, obviously you can hold your stocks, but you should know that your profits are going to diminish because it's converging back towards these averages. And then over here again, you could quite comfortably say, all right, here it is starting to diverge away again in a bullish trend, and you could now buy some more stocks. So this is, like I say, a really simplistic version of this. Let's go take a look at some charts. Right, so here we have the Naspers chart, and we have similar type of moving averages happening over here. So what I'm going to do is I'm going to just hide all of these for a second. You can just hide them by clicking on the eye here. Now if you have to take a look at this, it's pretty difficult to just ascertain where's a good place to buy because you've seen price really drop quite drastically over here. Now watch what happens when we add the 200 moving average. You can see that price has been appreciating on average quite a bit, and price has been above average for quite a long time. Alright, and that's pretty important to know, that price has been, they call it running either high or running hot. You can see it was above average for a long time. It dipped down towards here and then continued above average, and at this stage it's basically moved below average. The price is at a discount at this stage. This is where you would be starting to say, all right, maybe we should be looking for a good place to start buying. Now, how do you know when to buy? Because you don't know what this is going to do. It could continue lower, it could come back and converge back with us. We don't know. So we need to employ something else to help. Now I've got a 50 moving average line over here, and we can see that this has been higher than the 200 moving average all the way up here, and here is where it typically, or it started to divert or converge back in a bearish manner towards the 200 MA. So you could safely at around this point over here be saying, you know what, I think I should take profits over here, because you are going to expect it's probably going to start turning down. Now we can see that at this stage, and it hasn't crossed there yet, but it is probably going to be crossing soon. We don't know what it's going to do. It depends on what price happens over here, but this would not be a good indication for me to buy at this stage. If I had to be buying over here, I don't really see this all of a sudden starting to move up or go into a gentler form here. So I would want to wait a bit longer. Now we're going to add a 21 period moving average. Here we go. Now you can see that this is a faster line, and it moved right underneath this 50 moving average, which tells you it's diverging away quite aggressively from the other moving average, which is a very, very strong sell indication or take profit indication that you should be now banking your money and waiting. So with Naspers at this stage, with these averages crossing below here, what I would typically like to see is that price starts to converge back towards this 200 moving average, and that the 21 moving average starts to move back towards the 50 moving average before I enter. So this remains to be seen, and this we have to wait and see what happens. Now we're going to take a look at one or two others. I'm going to take a look at the JSE Limited chart. I'm going to just do the same thing over here. I'm going to hide everything. Alright, so just looking at it plainly like this, you wouldn't really know, is this a good place to enter or not. Let's add the 200 moving average. And you can see that price is currently below, and it is actually starting to move up towards the 200 moving average, which is a good positive sign. Let's take a look at the 50. Here you can see that price is still declining on average. However, it's starting to bottom out here, which is a good sign as well. So we might expect it to start converging towards this 200 MA in the near future. Let's take a look at the 21. And this is obviously the faster one. This is where it diverged. This is where you should be taking profit if you had bought at a previous stage. And here you would leave it alone. Here you can see that price is starting to move up and converge towards this 21, which is a good sign. This would be a good entry. And you can see that it just is moving sideways. So you would be holding this, and here you can see diverging. If you were in profit, you could sell, but I wouldn't sell over here. And of course we've got the benefit of hindsight, because you can see that it did that. It could have also dropped off, but you would have to wait and see what happens. But typically, if you're a long-term investor, you wouldn't really want to sell when it is in a discount area. You would want to be selling when it has gone above the 200 average. There you would be now typically wanting to take profit. Here you should be holding on and waiting for more entry points. And this, you can see that prices converged and actually gone above, and it is heading towards the 200. This might be a very, very good place to enter, I think, because it's a strong indication that price is going to move above the 200, and you would then be maybe looking to take profit up around here. So if you're new to investing, I hope this is a simple way that you can use to analyze whether price is good or not. Just to summarize quickly, if price is moving below the slower average, this is typically a good indication that you should be buying this, because at some stage it is definitely going to be above the average, because after all, this is the average line. And the average line is determined by some price action above it and some price action below it. And when it's below, that means it's at a discount, and when it's above, it's usually a bit overbought. So look, it's obviously not all the time like this, but this is just a very simplistic way to analyze. And of course, the old saying is when in doubt, stay out. If something is not clear, when you look at these moving averages as a clear sign to buy, rather don't buy, just rather wait. Like same with the Naspers chart that we looked at before. I'm not clear whether this is going to be moving towards the up average, to an above average price. So I would now at this stage just wait and see what happens, and when averages start to move and climb towards and converge towards the 200 moving average in a bullish trend, then I would be very interested to buy that again. All right, I hope that helps. Good investing and good fortune to you.